Yeah, I red-eyed it in this morning. It was fun. I think I get to a lot of the same conclusions that Dan does, but in a different way. So I grew up in a small town called South River, New Jersey. It was the town that my grandparents came to in the 1930s from Poland, along with boatloads of other Eastern Europeans. And my dad grew up there. My dad and mom decided to raise the family there. And on Saturday mornings as I was growing up, I often went and did Saturday morning errands with my father. We would go to the post office. We'd go to Mike the Butcher and get our meat for the week. We would go to the barber shop and my dad would get his hair cut. And inevitably, we would end up at Pulaski Savings and Loan, good Polish name, the bank where we went. And when my dad and I walked through the front doors of Pulaski, we'd walk across the lobby to the teller window. And my dad and the teller, whoever she was, always knew each other's names. They'd chat about the football game or each other's kids or the weather while my dad was doing his business. And this woman would always kind of reach over the counter and tussle my hair and extend this big bowl of lollipops so I could have one. It felt like a place we belonged. We often ran into people that we knew in the bank. When I was about 7 years old, I got my first savings account. And I went with my dad to Pulaski, and I got this green passbook. I don't know if any of you remember those passbooks. It had gold letters. And every time I had a birthday check from my grandparents or a little extra allowance money, we'd bring the passbook down there, and I'd deposit the money, and the teller would stamp it, and I'd see that tiny little amount of money grow and a little bit of interest grow. And it made me proud. It made me feel like I belonged. It was a place that the grown-ups that I knew went. Now, I still go to the bank on Saturday mornings, sometimes with my kids in Brooklyn. But for my kids, going to the bank means stopping by the nearest ATM to get some cash. On the rare occasions that I need a cashier's check or a money order, I don't know the other person on the other side of that window, and they don't know me. And for the most part, that's fine with me. I quite like being able to pay my bills at home in my pajamas on my laptop. But that doesn't work for everyone. And as we know, the banking industry has changed a lot. Dan talked about some of those changes. And we've been encouraged to move from visits to the teller window to the ATM, and now much more to online banking, using technology, because it saves banks money. It's what they should do. But while all that's happening, there's a whole community of people, the unbanked and the underbanked, who don't necessarily like those changes and maybe never used banks. And this is the alternative financial services industry, the check cashers, the payday lenders, the pawn shops, which have been around for a really long time. Now, policymakers think this is a problem. They think that low-income people should go to banks, that banks are too expensive, that check cashers and payday lenders are too expensive. Well, if you read anything about these businesses, you'll hear the press call them abusive and predatory and sleazy and a whole other set of names I probably can't say here because it's being filmed. But I'm not convinced they're right. About 5 years ago, I had a guest speaker in one of my classes, a guy who ran a chain of check cashers in the South Bronx in Harlem. And although I had been writing some of these negative things about the industry, I left that session feeling like I wasn't sure what to believe about them. I'd been doing research in low-income communities for 20 years, and I thought, why is it that people would continue to go to these businesses? I knew that low-income people were not stupid, and I felt like I needed to understand it better. And so, 5 years after that first visit, I called up Joe Coleman, the president of Write Check, and I asked him if he would hire me as a teller. So last November, I started working in the South Bronx at one of the stores for 4 months. And that's me a few days ago working the window in Oakland, California, where I'm working at a payday loan check cashing shop currently. And what I now believe, after spending day after day and shift after shift working in these businesses, is that poor people know best what they need. It's not the policymakers and the researchers. And right now, until this technology hopefully catches on, the businesses that are serving them best are the check cashers and the payday lenders. And no one is as surprised about that as I am. So the people that study this industry, right, they like to divide us all into these three categories that Dan mentioned. There's banked, people like me who rely pretty much exclusively on banks. There's the unbanked, people who don't have bank accounts, although interestingly, many of them have had bank accounts in the past. And then there's the underbanked in the middle. Well, those categories are growing, and this is one of the things that concerns people. In 2002, there were 10 million Americans who were unbanked. And 10 years later, in 2012, that number had grown to 17 million. So in one decade, a 70% increase. Not surprisingly, as the slide shows, the underbanked and unbanked are concentrated in low-income communities, like Mott Haven in the South Bronx, which is one of the poorest neighborhoods in the United States, where I worked. So many people choose not to use banks. If banks are so terrific, I was thinking, why aren't people using them? Why are customers continuing to go to Write Check and Check Center, the places I've worked? And what are they getting there that they can't get at banks? Well, I have a different graphic than Dan does that pretty much says the same thing. One hypothesis is that it's a problem of access, right? If you go to a low-income neighborhood and you throw a stone, you're likely to hit a check casher. You'll never hit a bank. In Manhattan, there's one bank for every 3,000 customers. And in the South Bronx, there's one for every 20,000 customers. So clearly, access is a problem. It's not that easy to find a bank if you live in a low-income neighborhood. But access isn't the only issue. There are lots of places where banks and check cashers coexist on the very same block. And where I worked in the South Bronx, there was a major bank branch about 3 blocks from the check casher where I worked. And where I'm working right now in Oakland, there are not 1 but 2 bank branches on the same 2-block commercial strip as the payday lender check casher. So what else has been happening? If it's not just access, what else has been happening at the same time that these businesses have grown, the check cashers and the payday lenders? Well, one thing is declining wages. There are more people that are making less and working harder to get it. Real wages have gone down since 1972. And there are many, many indicators of inequality that I could show you, but one of them is the gap between the average hourly wage in the United States and the minimum wage, which was relatively small in 1968. But by 2012, minimum wage workers were making only 1/3 of what average hourly workers were making. That's a big difference. So the reason that's always given for why low-income people should use banks instead of check cashers is that check cashers are expensive. And I wondered about this. Clearly, it seems that the fees are high. You're paying 2% to 5% to cash a check, 49 cents for a money order, $1.50 to pay a bill times all the bills that you're paying. So when I finished my stint in the South Bronx, I spent the summer interviewing customers. I hung out in the lobby of Write Check, and I interviewed 50 people who used the services regularly. And when I asked them why they went to Write Check instead of the bank down the street, you know what they told me? They said, Lisa, banks are too expensive. We can't afford to use the banks. So if you think about it, some of this is probably not unfamiliar to you, right? ATM fees have gone up over the last 5 or 10 years. The monthly service charges that you're charged to have a checking account have gone up. You lose your debit card and you need to replace it. It costs about twice as much as it did 5 years ago. You want your statement in paper instead of just online because you might not even have the internet. It costs more. Overdraft fees have gone up. And what about free checking accounts, right? A lot of banks have these big notices for free checking accounts in their windows. Well, in 2009, 76% of non-interest-bearing checking accounts were free. Just 2 years later, in 2011, that number had dropped to 40%. So it's getting harder and harder to find really affordable financial services. And let's talk for a moment about transparency, which I think is linked to cost. So has anyone, when you open a bank account, you get something called a disclosure agreement. Has anyone ever read your disclosure agreement, printed it out? Anybody? Maybe you're like me and you just scroll to the bottom and you click agree, right? You don't know exactly what you're signing, but you figure somebody else would have caught the problem if there was a problem. So any guesses on how long it would be if you did print it out, or if you asked your banker, can I see a copy of that disclosure agreement? 10 pages? 30, 20, 111 pages on average. 111 pages. That would be the length of not one, but 2 copies of Romeo and Juliet. And I guarantee you that if you sat down and read that book cover to cover, twice sequentially, you'd have a much better time than you would if you read your disclosure agreement from the bank. How many people here know what date of the month your monthly fee hits in your bank account? Anybody know what day that money is taken out? Nobody. If you're poor, you can't afford not to know when that fee is taken out. That's how close to the edge people are living. There's a couple of other things that banks do too that are disturbing, to say the least. Until a couple of years ago, when a couple of major banks were hit with big class action lawsuits, there was a practice that banks were engaging in called high-low check sequencing. And what that meant was that, let's say you had $75 in your checking account, and you wrote 3 checks, 2 for $50 and 1 for $100. What banks would do is ensure that they would deposit that $100 check first in order to maximize the overdraft fees, right? So you'd pay 3. Whereas if they had put a $50 check first, you would have had enough to clear that first one, and they only would have gotten 2. You may or may not know also that banks will take deposits into your account 5 days a week, Monday through Friday during banking hours, but they take money out of your account every day, 7 days a week. So you go to the bank on Friday afternoon after work, you put your check in the ATM or at the teller window. It's not going to show up in your account until Monday at the earliest, maybe longer if the check takes longer to clear. But if you go out on the weekend and you buy groceries or pick up some shoes for your kids or go to the movies, that money's coming out of your account immediately. And so it's very hard to predict when the fees are going to hit. And this is one of the things that really gets low-income people. They can't time it. And so they get hit with an inordinate amount of overdraft fees. What do you see when you walk into a bank lobby? It looks nice, right? There's lots of marble and glass. It's usually pretty clean. But you don't see a speck of signage. You don't see anything about what the services are that are available, how much they cost, right? Imagine that you were a person who'd never gone to the bank like I went to with my father, and you went in the first time and you knew you were supposed to get a bank account because that's what everyone says. What would you do? It's not exactly inviting. You walk into the lobby of a check casher, and there's a huge sign that spans those teller windows that tells you what every service is that they provide and what it costs. So if these guys are sleazy and abusive, they're certainly telling you exactly what they're doing when they're doing it. It's a little bit like the menu of a fast food restaurant hanging right there over the window. Low-income people need this information because they live incredibly close to the edge. When I'm working in these businesses, day after day, I see evidence of this. I see people buying 1 stamp to send a bill. I see people buying 1 Metro card in New York with 2 rides on it so that they can get where they're going and come back. I see people coming in with 3 different bills and $100 maybe, and trying to figure out how to spread that money over those 3 bills without paying any of them in full, but doing it in a way that nothing will get shut off, that the lights will stay on, that their phone will stay on. One day, a young African-American woman, she was probably in her late 20s, came to my window, and one of the things that we did at RightCheck was we took money off of people's EBT cards. These are electronic benefits transfer cards that the state gives low-income people, and it loads their food stamps on it, and it also loads cash benefits, and they have to get the cash somehow. So we would charge a $2 fee for that, whether the person was taking out $150 or $37 or $89. And on this particular day, this woman came in and she asked me to take out $11. She had $11 available to her. So I swiped her card, she put in her PIN number, the machine approved it, and I gave her $9 back. And I was kind of shocked by that, right? She was paying me $2 to get $9, almost 20% of what she had. And so after she left, I turned to this woman, Christina, the teller who had trained me, who'd been there for 10 years, and I said, why would she do that? Why would she pay so much money when she clearly doesn't have very much? And Christina, who had so much experience in the neighborhood, kind of looked at me as though I was born yesterday, and she said, Lisa, you can't get $9 out of an ATM machine. You can't get $11. You can't get $23. And these people need every dollar that they have the minute that it's available to them. So for this woman, paying me $2, paying the business $2 was less important than getting that $9, even though to someone like me, it didn't make much sense at the time. 3/4 of residents of the South Bronx have no discretionary income. That means no slack in their budgets whatsoever. Banks are too expensive for people who are living on the edge. But it's not just expense and transparency that are motivating people to use these businesses. It's also service. When I first started working at RightCheck and joined my fellow tellers behind the window, I realized that there was something different going on. Customers came in, and the tellers who'd worked there for a long time knew them by name. They often would start a transaction before the person got to the window because they knew what they wanted. People came in every week, sometimes every day. It felt a lot more like Pulaski Savings and Loan when I went with my dad than my current bank does in Brooklyn, where I know nobody. One afternoon, I was working the window, and a woman named Marta came in, who I hadn't worked before, but I knew she was a regular, and she wanted to get a government check cashed. In New York State, you can charge 1.95% of that. She brought the check to me. She slid her key chain under the window because it had her RightCheck key tag on it, and I punched in her regular customer number, and the screen flashed up, and I saw this note that I hadn't seen on any other customer's screen. And it said that when Marta came to cash her check, she was supposed to pay us $20 every time she came in. Once again, I asked Christina what was going on because I didn't understand it. And Christina came over, chatted with Marta a little bit, and then she explained to me that a month or so ago, Marta had brought in a bad check that had bounced. Now, some places might refuse to serve that customer anymore, but instead, RightCheck had worked with her and made an arrangement whereby every time she came in, she could pay $20 back. Now, on this particular day, Marta said, I can't pay it back today. I had this unexpected medical expense, and I really need my own check. I didn't know what to do. Well, Christina punched in a few numbers. We cashed the whole check. We knew she'd be good for it. She'd been a regular customer for a long time. And what's interesting is that when Marta left, right, she was happy, and RightCheck was also happy. It was good for the business, because you know that when she goes out there, she's going to talk to her friends and her family and her coworkers and talk to them about the kind of service that she got and the way in which this business was willing to accommodate her situation. So I want to ask you one more question. Have you ever raced home from the bank to tell your friends and your family members how fabulous your experience was? Has anybody ever recommended their bank to anybody else? I mean, I sort of feel like we should get rid of these words unbanked and underbanked and call us the unhappily banked, which is a category that will span all kinds of categories. So it wasn't just that I was imagining what Marta would do when she left the store. Customers showed their appreciation for us. Low-income people tipped us. Sometimes my colleagues, who were there a lot longer than I was, would make $40 or $50 in tips during a shift. I was an outsider, so I never made more than a few dollars, but they brought us coffee in the morning. When Christina had a baby during the time that I worked there, people dropped off gifts for her. And when I was sick, people called to find out where I was. I'm sure none of you have brought a cup of coffee to the teller at your bank. I don't even need to ask. Now, before I say anything more about the problems with banks, it's important to recognize that banks and check cashers have very different business models. Banks have tons of overhead. They're paying for, high towers full of MBAs doing fancy logistical models that they need to do to keep the banks running, right? Or not. They're paying for them either way. That's the problem. Whereas check cashers they make a profit by doing a lot of transactions. That's how they make their money. They have low overhead. The staff isn't that, if I could walk in and start doing it in a week, we know that you didn't have to have any fancy education to do it. So as Joe Coleman, who's the president of RightCheck, explained to me once, he said, Lisa, a bank wants one customer with $1 million. Check cashers want 1 million customers with $1. That's the difference between the business models. And so while I've been arguing this whole time that banks are not a good fit for poor people are also not such a great fit for banks. All of this adds up to an enormous gap between the rhetoric of policymakers and researchers and the reality that low-income people are living on the ground as they try to figure out how to take care of their financial needs. You know, it's almost as though researchers were sitting there in their ivory towers, and I can say this because I live in one too in the daytime when I'm not up in the South Bronx, and saying, you know, why is it that they can't be more like us? Why is it that they're not using bank accounts? It's almost like a Marie Antoinette moment, right? Let them have checking accounts. But if we really want to help low-income people get better access to financial services, we have to listen to what they need, instead of assuming that what we do is best for them. Thank you.